Good day, fellow investors. The most popular question on Reddit is whether Cathie Wood has lost her touch. And I've discussed that exact question in January of 2021 when Cathie Wood was the king of the game or the queen of the game, where she destroyed everybody else and everybody said it is the next Warren Buffett. And my answer was that it is just a fund flows game, and she didn't lose her touch. She never had a touch. She just had money flowing into companies that have low liquidity, small ones, that she pushed higher. And these flows going into stocks that go up disappear when things get negative because there are no fundamentals. So the boom you have seen here from ARK was just flows entering the market, buying more, increasing the purchases, increasing the available funds for Cathie Wood to buy more and more of her names. And if you look at the Cathie Wood portfolio on Cheaper Than Guru, then you can see how, of course, Tesla, one outlier there, but she was buying, okay, Roku, and then we go into smaller and smaller companies where she managed by her buys and by promoting them to push those higher and higher. But again, when things turn around, you can see here Guru buy price 31, 74% down at the current price, and that is because there were no fundamentals. And of course, these stock declines is as the ETF or other funds are forced to sell to cover for the people selling their ETF and requiring their funds back, then the spiral that pushed things up here reverts, and it's a death spiral as it goes down here. So this was just a game of funds, so no touch, no nothing, and that's something you have to understand, because she was buying these companies that lose $1.5 billion, $2 billion per year. Yes, revenues grow, but then again revenues decline as the bubbles bust. But the fact is that yes, you can make a lot of money, and that was the attractiveness a priori for Cathie Wood from the start. If we nail the right company, the Tesla, the next Tesla, then we make a lot of money. The problem is that you are the last fish in the feeding circle if you play that game with listed companies, because it's about venture capitalist investing. So this is venture capitalists, Masayoshi-san, Tencent, etc. This is then the second, third rounds, and this is you buying the stock after it has gone public. Cathie Wood plays this game because it's much different when Masayoshi-san invested 20 million in a young Jack Ma. 20 million here, 20 million here, 20 million here. But if you buy at the IPO, that means that the company went public to get money from the market, to cash out. The venture capitalists are cashing out, and you are buying here, and that's a very risky game. Yes, some of these companies will be the next Tesla, the next Amazon, the next Google, but 90 of these will go bankrupt, and then with public companies, 2% of your portfolio, if this becomes a 20x, it's not sufficient to cover for all the declines there. So I would say Cathie Wood has no touch, has never had a touch. It's just a game of money play. Because venture capitalists, they can make 1,000 times their money. When the company has already went public, thus from zero to here, from the first venture capitalist investment to here, it's already 1,000x. And you come in, Cathie Wood comes in at 1,000x already, and then the room for bigger increases is smaller, and the risk is also much higher. And the fact is that, let me put it like this, when the stock goes up, nobody asks about the fundamentals. But when the trend reverts, everybody starts looking at the fundamentals, and when there are none, there is no touch, there is nothing. Everybody happy here, nobody questioning, except a poor Eastern European kid having a YouTube channel that does a video like this, so I hope I have helped you there. This was at Peak ARK, and this is the story behind ARK. And I also made a video on their research. It's high school level research. It's ridiculous, and I'm sorry for all of those who have lost money. I hope ARK rebounds, and this is the worst video I have made, and look how stupid you looked, Sven, but it's just a risk and reward I am not taking. We are not, retail investors should not be venture capitalist investors, because the risk and reward is simply not positive. Even if it looks like here and there you can make a lot of money. Thanks for watching. For value investing, for retail investors, no gambling, subscribe to this channel.